And so we became reliant on really big centralized ledgers to fill that gap. And that's where you get broken money. That's where money gets corrupted. That's where people are often debased. That's where there's this kind of invisible rug pull happening.
I'm your host, Mags, and you're listening to Magsplaining, where I bring on interesting guests to talk about tech, money, and power shifts. I hope you enjoy this episode. This show is powered by Ledden, the global leader in Bitcoin-backed loans. Visit ledden.io/mags to learn more. So excited to have Lyn Alden here for the inaugural episode of my podcast. And she's also the author of Broken Money, which is probably one of the best Bitcoin books out there. So, Lyn, why don't you give a little intro on yourself?
Thanks for having me for your first episode. Excited for your show. My background is a blend of engineering and finance. So initially I was electrical engineer, and but I've always had this passion for finance. That was always kind of my real interest. And so I started analyzing first equities and then broader macro flows. I try to apply a systems engineering view to how capital flows around. That's kind of, if I have an edge, that's kind of where it comes from. And of course, if you have both engineering and finance, you inevitably find Bitcoin and try to tackle that from multiple different directions. So I've been pretty into the Bitcoin space for many years now. Initially as an interested observer, and then increasingly as a participant and a voice in the community.
I'm going to dive right in, and I really want to talk up your book, Broken Money, because I think so much of what we face in society, some of the problems are to do with broken money. So money is one of the oldest technologies that we have available to us, and your book sort of traces its evolution and disruption by technologies like telecommunications and digital currencies. Why do you describe money as broken in your book?
Because I think we're in a technological mismatch era. And one of the analogies I use sometimes is a much bigger and longer one that humanity went through, which is when we basically invented farming and we transitioned from Paleolithic to Neolithic. Ironically, as far as evidence is concerned, life expectancies actually went down on average. And so these civilizations became way more powerful, but on a per capita basis, it was actually a pretty rough life because then you bring all disease becomes a factor, which is less of a factor in nature. All these issues compound, wars and things like that. And for like a long time, it was ironically this like macro upgrade, but a micro downgrade for humanity. And that kind of persisted until people found hydrocarbons, used energy to make like running water, like pumping water around, which can make farming more reliable. So you avoid plagues and famines and things like that, help with sanitation. And then, more people get off the farm and kind of start figuring out how to make medicine and figure out germ theory. And then finally, we kind of close that gap and we finally have a life expectancy and an overall kind of standard of living that very much eclipses the starting point.
So I'm hearing we centralized humans and it was a bad thing.
It was a mixed bag, I think, basically, because it's something if you're going to develop, you have to go through it. And then a farming community was more powerful because they have a lot of more people and they can displace all the others where they came from. But it was like this weird valley we had to go through to like a dark period of that whole transformation. And money has kind of gone through that at an accelerated pace, which is we invented fast transactions. So we invented the way Morse code and telegraphs to be able to talk long distances, but for a long time we didn't have fast settlement. And so we went through this period where some things got better. It's great to have, the whole world speaking to each other, but then the downside is that everyone's speaking to each other, commerce is moving around really fast, but there's no way to just teleport gold around. And so we became reliant on really big centralized ledgers to fill that gap. And that centralized ledgers, and really there wasn't many other great solutions, and all the incentive just kind of kept pointing toward more centralization. So even people tried to hold out and it just didn't really work. It all kind of condensed toward these centralized ledgers. And that's where you get broken money. That's where money gets corrupted. That's where people are often debased. That's where there's this kind of invisible rug pull happening opaquely to people around the world at different speeds for a century and a half now. And so that's kind of this gap we were in. And the creation of Bitcoin was kind of the running water hydrocarbon moment, which is we finally have kind of way, or at least a sight out of this kind of valley, which is that's the invention of fast settlement, the ability to send fund of value to someone nearly at the speed of light, depending on what layer you're talking about. But either way, I mean, orders of magnitude faster than gold. in a way that can't be reversed unless there's some, as long as the network is functioning and decentralized. And that's a new era. And then it takes time for that era to catch on because you're starting at zero. So it's not like you just snap your fingers and you have it. It has to grow into this big liquidity network effect that already exists, and the technology has to be adopted. But that's why I find it so interesting that it basically it's not just a new fintech thing, because fintech has always been these new layers on top of banking. This is just kind of a foundational fix to something that started a century and a half ago with the telegraph.
So it's like the rise of paper gold, paper certificates of gold, and all the paper things. Can
Yeah.
you dive a little more into what the consequences of the broken money are? Like how that ties into inflation and wealth distribution and economic distortions?
Sure, there are a lot of consequences. And again, I mean, there are good things with money moving around faster. I mean, it's funny. One of the books I cited in Broken Money was Money and the Mechanism of Exchange by William Stanley Jevons in 1875. And that was kind of the Broken Money book at the time. It's kind of like it's going in the nuts and bolts of money. And he would talk about like the frictions of coinage and the weird little things about it you don't think about and the little arbitrage aspects and the kind of the messiness of it. And so money's long since been an issue. It's never like we had perfect money and then it got broken and we're trying to re-perfect it. It's always been a bumpy ride. But in the current system, there's a couple main consequences. One is that everyone kind of needs bank accounts in order to kind of participate in global finance. And that comes with a couple things. One is that comes with you can rug pull the push of a button or the stroke of a pen. Whereas in the current system, like everyone's kind of familiar with that chart of like Roman currency just kind of deteriorating, but that's over like a century or two period. It's actually a process to get the coins back out of circulation, remelt them into debased forms, and then push them back out. Whereas if everyone just kind of sticks their money in a bank account that's supposedly backed by gold back in the day, and then with the stroke of a pen at like midnight on a Thursday, you can be like, actually, it's worth half as much gold. Thanks for playing. And so debasement can happen an order of magnitude faster. In addition, a lot of kings throughout history would have loved to surveil every transaction that the peasants do. It just never occurred. It never occurred to them that's even a possible thing that could
Yeah.
could happen. Whereas in the current era, when everyone has bank accounts, it comes with surveillance attached to it, and really the whole kind of global current tax structure of income tax kind of relies on the assumption of ubiquitous surveillance. That kind of arose with central banking for a reason because that became more possible because everyone's just got their money in the bank and the employer uses the bank and there's this whole system that's all automated and surveilled. And so the whole apparatus is kind of built on that assumption continuing. Then the other one, of course, is you have instead of kind of like one or two or three global monies, border basically has their own money. And before, I mean, there was different types of stamps on the gold and silver coins, weird little mismatches of like, what their exchange rate is and stuff like that. But they were still kind of the same sort of natural basis behind it. Whereas
Yeah.
now it's like every fiat currency is its own arcade token, either floating against other ones or pegged or pseudo pegged. And so every single border is this like weird friction. There's over 40 currencies in Africa. There's over 30 currencies in Latin America. Before the euro, there was, a lot of currencies in Europe, and then the euro brings its own challenges because you have a monetary union without a fiscal union.
Yeah.
And then Southeast Asia has a bunch of currencies. And so there's something like 180 currencies globally. Dozens and dozens of rather large currencies, and they all represent payment frictions, capital flow, borders, debasement zones that are happening at different speeds. So people have to navigate this, and that's what's broken.
So I'm going to continue with that thought because in your book, you talk about how Bretton Woods and the petrodollar systems amounted to forms of monetary neocolon. Oh my goodness. Monetary
Neocolonialism.
amounted to forms of monetary neocolonialism with the US being in charge. Can you unpack that and sort of the impact on to particularly developing countries or countries with devaluing currency?
Sure, that could be a whole episode in itself.
Yeah.
Going back to your prior point, I would say if I summarize what's wrong with money today, it's that in the fiat age, uh, kind of the best way to make money is to short fiat currency and be long other things rather than to make things. That's kind of what's ultimately broken. And basically, it's the Cantillon effect on steroids. And so instead of just the people that mine gold benefiting from it, and then as it kind of goes into society, it causes inflation, those that are close to sort of source of credit creation. So people around the central bank, the big capital banks around that, the primary dealers, and of course nations that are close to the source of the reserve currency creation process. And so long ago, the best thing you could do is basically invent a new product. If you wanted to become wealthy, change the world. And now people go to Wall Street and they short currency and then they buy other things and they get some sort of spread, and the percentage of the financial sector has grown as a share of the economy. And so yeah, one of the most reliable ways to get rich is just to work in finance, which is not a particularly healthy aspect of an economy. And so going back to the neocolonialism, we basically extended that to the world. And so for a long time, the technologically advanced world would go to places with less technology and conquer them, outright colonialism. That got pushed back on in a variety of different ways, from logistics to ethics to all sorts of reasons. And instead, what kind of is in its place is these countries all ostensibly operate independently and are not, quote, colonized, but they use the money of, the historic colonizers. And they are often indebted, usually with a string of debts that goes all the way back to the colonialism era. And those are never really considered done. They just get refinanced perpetually. And the reason it kind of works like this is, or the consequences of it working like this is, so the whole world uses dollars, and there's four main kind of reasons why they use a dollar, like things that the dollar solves for them. One, international contracts often priced in dollars. So going back to that prior problem of 180 currencies, if South Korea and Brazil want to make a deal, or an entity in either country wants to make a deal, they don't necessarily trust each other's ledgers, or it's not liquid, or they don't know what they're going to do with surpluses of that currency if one's running a trade surplus with another. They instead say, well, the biggest, most liquid, most sound ledger in the world is the dollar, so we'll use that. So that's used for contract pricing. Then there's not a very liquid market, say, Egypt's currency and Thailand's currency as two examples. Maybe that's a weird exception, and there is. But for the most part, any two smallish countries in terms of GDP, you're not going to have a really big liquid currency exchange market. You can imagine how many combinations there are between 180 currencies. If you just, how many combinations, it's a huge number. And so instead, there's only a handful of currencies that have true volume liquidity with each other. And instead, most of them, when you want to trade, say, Thai currency to Egypt currency, you trade it for the dollar and then trade the dollar for the other one. So the dollar's in 90% of currency transactions in the world because it's used as kind of the foundation that others trade through in order to trade with each other, with a handful of exceptions. I mean, euro, Swiss franc, British pounds. There are a couple others that fill in the other 10%. But for the most part, it's the dollar. And then it's also the currency for reserves. So when countries want to hold reserves, they will often hold treasuries or other kind of, dollar deposits and things like that as kind of intermediate or longer term savings. And then four is they will use it for cross-border debt financing.
Yeah.
So if an entity wants to borrow money, and an entity in France is lending to an entity in Brazil, they might not trust the local currency, so they say we'll do it, but we'll do it in dollars. Or, we can do it in either one, but you're going to get a much lower interest rate if you do it in dollars. And so there's all this cross-border debt that's owed in dollars. And the challenge with all of that is that the United States at any time can create a lot more dollars. So they can always rapidly devalue anyone using it as savings.
Yeah.
But at the same time, they can also, if the dollar's kind of, weak, or they have inflation and things like that, they can do a temporary hardening period where they jack interest rates up super high. They really kind of try to rein in their debasement as much as possible, and that catches out any countries that happen to be indebted in dollars. It's kind of like if you bought a house in the U.S., but your mortgage was denominated in Swiss francs, and suddenly the Swiss franc like doubles relative to the dollar. Your liabilities just got really strong relative to your assets and your cash flows, and it's a problem. And that happens to emerging market entities all the time with the dollar. And so the fact that we can just kind of choose either whether debasement works for us or whether hardening works for us, and everyone else is kind of just along for the ride, is it makes it very hard to develop. One of the kind of the sad statistics is, if you look at how like MSCI defines developing versus emerging markets, there's very few countries in the past like 50 years that were emerging and are now developed. It's rather few. A handful of kind of smaller ones in Asia have crossed that divide. And it's pretty hard to fully develop when you have liabilities that another entity can just kind of squeeze you on or debase you on as they see fit.
Sounds like a really unfair system. And I know that doesn't just happen with the US dollar being the base. If you just look at Africa specifically, right, you have the franc still being in use because the neocolonialism, um, it's the same kind of impact, right? Historically, France had a pull on all the countries there, and we're seeing massive amounts of financial repression because of that. And I think Alex Gladstein really eloquently in his book summarizes sort of the issues there. And so we have these problems where these countries, they don't have, their own kind of economic freedom to pursue, nor do they have, censorship resistant money, which is an important component for human rights, especially in some of these countries. So when we have these emerging markets and they're battered by this volatility that's coming from the US and the global system, you have all these debt bubbles and reserve currency burdens that are coming with it, what you just described, and kind of undermining the national autonomies of these countries. How do you think these countries can achieve greater financial sovereignty in this era where we have Bitcoin offering alternatives to a SWIFT system for payments or dollar dependence?
So it depends on the size of the country. China so far has kind of been taking the best shot at trying to claw their way out of that system, because they have the scale to potentially to do so, where their dollar-denominated debts are pretty small relative to their GDP now. They were accumulating dollar reserves for a while until they decided it's really no longer in their best interest, and so now they accumulate other types of reserves. Typically, they're able to do some international contracts in their own currency, and then have their own kind of alternative settlement and payment systems. And so that's kind of an example of what can be done. And then they can, of course, organize other countries to participate in some of that. There is challenges. You'll always see people talk about like a BRICS currency right around the corner, or like how everyone's just going to drop the dollar right, and it's like years later.
Just like the recession's coming.
Yeah, it's like, did any of that happen? It's like, oh yeah, 2% of it happened. It's like, great job, guys. And so, but it's not. It's because going after a massive network effect is hard,
Yeah.
and there's all sorts of challenging incentives to piece together, and it's ultimately a closed source system. So you're kind of like, there's this big existing massive closed source system, and you'll have these a handful of other entities trying to build their own little closed source competing thing. And it's great that there's an alternative for certain places in the world, but it's ultimately a challenge. The other thing that countries can do is, they can put some of their reserves in something that they fully control. Historically, that was gold. More recently, Bitcoin's obviously an option, and there have been entities, like smaller entities, that make outsized play, like Kingdom of Bhutan or El Salvador, and they, can start kind of in some ways chipping their way out of that status without the scale that something like a China has. So generally, it's a combination of trying to get both your asset and your liability side, or at least one or the other, gradually out, or diminish in that system. And the challenging thing, the reason that reserves and cross-border lending tend to be in the same currency is because what reserves are generally used for is one of two purposes. One is, let's say you're an emerging market, your currency is weakening, you can sell some of your reserves and buy back some of your own currency to slow it down from devaluing. That's number one. Or number two, if there's various entities in your country, whether it's banks, whether it's corporations, that have dollar-denominated debt, if you have dollar-denominated reserves, you can lend them in your own country some of the reserves, so they don't, during, let's say, a pandemic or something, when cash flows all kind of seize up, if everyone's kind of in rough water at the same time, you can lend dollars to entities in your country to keep them afloat until the cash flows come back. But if you have a mismatch, like all your assets are gold, but all your liabilities are dollars, because no one
Yeah.
really lends in gold currently, and if gold falls for a period of time, or otherwise it's just too liquid to operate like that, you can have an issue. So that's why network effects are hard. It's kind of like how, if you have a lot of merchants and buyers, they tend to all be on one platform because it's hard to kind of get both sides to shift over to somewhere else. The same thing's true for assets and liabilities around the world. They tend to want to be at least partially overlapping. So countries kind of claw their way out of it, on both the asset and liability side. And as Bitcoin grows, it's interesting because, in addition to being an asset, it's also a settlement network. And when it was 100 billion, it was just too small to matter for sovereigns. But as it's increasingly a multi-trillion-dollar network, and their closed-sourced mechanisms are always kind of struggling, there's this gigantic, increasingly big open source alternative that's out there for them.
And like thinking about gold, right? Settlement finality, you're still very limited by the physical world. And then on top of that, you have the US implementing tariffs, which make it more challenging. And the price is, well, it's a little bit more volatile than it used to be in some ways, right? Kind of want to dig back into what you were talking about, how certain countries are kind of trying to shift away or de-dollarize. Many central banks around the world, especially Asia, some of the global south countries have been noticeably shifting their reserves away from US treasuries and into assets like gold. The non G7 banks are no longer net buyers of treasuries, so they're ramping up their gold purchases. What's driving this move, do you think? And do you think it's all bad?
I think there are probably two main reasons for that. One is that whenever the dollar goes through a strengthening cycle, and there's only been $3 cycles since the 70s. So since these all became post Bretton Woods floating currencies, there's been three major like sine waves of dollar strengthening, and among those $2 weakening ones. Whenever it goes to that strengthening period, countries generally stop accumulating treasuries on net. And if anything, they become net sellers to kind of protect their own currencies. In contrast, during weak dollar periods, that's when they tend to say, well, the dollar's weakening. I can, print a lot of my own currency and weaken along with it and buy treasuries for a rainy day. So one is just because we've been in a 11-year kind of strong dollar period since 2014. Um, that generally results in less treasury buying, especially from the foreign official sector, which is what they're trying to manage. So that's just kind of the background thing. And then two, ever since the global financial crisis, there has been this shift toward gold. So for decades, there's been this gradual reduction in tonnage, and that was kind of a centralization in a way, kind of the 2000s and early 2000s kind of decade. And gradually, the gold's been kind of reasserting itself in the system. And then, of course, when Russia invaded Ukraine and then the reserves were frozen. That was kind of the biggest scale of that happening. Prior to then, it was mostly kind of like smaller pariah states where that can happen, and no one really kind of says that could happen to them. And so there's been this kind of more recent uptick again toward gold. And basically, gold gives countries some degree of sovereignty. If all your reserves are denominated in one other country's ledger, they can just freeze it. Is your country even sovereign? Or you're just a satellite state to an empire. And so gold in custody does some of that. In addition,
The key part, though, in their custody, right?
in their custody, and there's also been a shift toward repatriation. So Germany, for example, and it's funny because it takes years. So we're talking about Bitcoin, but when they run a repatriate gold, it takes like years and millions of dollars.
We're in the age of like ships traveling the globe again to repatriate gold or planes. And like
Pretty
imagine,
much.
you get a plane crash or a boat sinking and we're
Yeah,
good old fashioned treasure hunt.
pretty much. And it's and so yeah, and the reason they didn't there were kind of two main reasons they had it not really in their custody. One is the historical aspect of like Nazis in Europe. So they'd say, well, this is I don't want to get conquered, so they would ship their gold over to the U.S. for protection. And then two, because of gold's slow speeds, if everyone just kind of puts their gold in the New York Fed, country A wants to, settle something with country B, they can just say, hey, that our little bucket of gold in that building, just move it to that other
Ship the paper
country's
around.
bucket. Yeah, just take the bar out of that one, put the bar in the other one, or whatever the case may be. Uh, and that's great as long as you trust the country running that.
Where's the
Uh,
audit of the gold?
yeah, is it audited, and also can it just be taken if you do something that the empire doesn't like? And so there has been this effort to kind of repatriate some of it, or in some cases all of it. So there's this gradual shift toward one, treasuries are getting debased. I mean, this was like one of the worst 5-year periods in treasuries in history, and gold's done great. So there has been an increased interest just in debasement protection, and then also just protection against seizing and other things, and that comes at the cost of speed.
We're deglobalizing, right? Now the pendulum is swinging and nobody's trusting each other anymore. And so we need those assets that are kind of fundamental and can't be seized, can't be stolen, can't be censored.
Yeah, I think we've gone through a kind of a pendulum of history, which is after World War II, the world was about as centralized as it ever has ever been. Because there's kind of one country standing with like the industrial base, the gold, the military, the legal structures that is the capital wants to be there, and then there's kind of this been multi-decade shift back to kind of how things normally are, which is somewhat more decentralized. If you look at like kind of estimates of global GDP over like thousands of years, for example, India and China used to be really big. And then during kind of the 1800s, the whole kind of colonialism era, that they collapsed, basically all this technological mismatch and other factors. And they've been kind of regrowing back to like what their historical baseline is, given their population size and other things going on there. So I think we're kind of exiting a unipolar world and we're entering a more multipolar world, which is a multi-decade story.
Wish you could access cash without selling Bitcoin? Ledn makes that possible. The global leader in Bitcoin backed lending, Ledn has issued over 9 billion loans since 2018 and has a perfect record of protecting client assets. Why is a Ledn loan different? With custodied loans, collateral is not lent out to generate interest. There's no credit checks, funds in less than 6 hours, and there's no monthly payments, so you can repay whenever you want with zero penalties. And proof of reserves reports verified by a top accounting firm are published every 6 months. Ledn gives Bitcoin holders a secure, transparent way to unlock liquidity without selling. Learn more at ledn.io/megs. That's ledn.io.
Yeah, it's multi-decade. And I think another important piece that I want to talk to that's related to that is you have famously likened the US fiscal situation to a slow motion runaway train of large deficits. Lyn, please explain your meme. And why do you think this meme resonates so loudly with your audience?
So yeah, nothing stops this train. Yeah, I mean, I started talking about the fiscal dominance back in like 2020, and that's kind of a wonky technical term. And nothing stops this train. Obviously, it touches on Breaking Bad, which a lot of people have seen. Also, even if you haven't seen the show, I mean, the kind of the description kind of speaks for itself. A process that's very very hard to stop. And basically, what it means is that U.S. fiscal deficits kind of above average size are here to stay for the foreseeable future, any sort of investable time horizon of let's call it 10 years. And that has implications. So generally speaking, economies are either in monetary dominance or fiscal dominance. And in the history of the US, kind of the history of this fiat era, basically, first we were in monetary dominance, kind of the rise of this whole kind of central banking and telegraph era. That blew up in the Great Depression, and the whole world kind of was in that together. Um, and that was a period of a shift toward fiscal dominance. So basically, all this private sector leverage built up, it started to collapse, and we kind of shifted that onto the public ledger. And then during World War II, we basically inflated that away. And then we went through this another long period of monetary dominance again, where most money creation is happening from bank lending. We're building a private sector leverage more so than public sector leverage. And then that all blew up in the Great Recession, 2008. And then once again, much like the 30s and 40s, started shifting from private sector leverage to public sector leverage. And in the U.S.'s case, one, it's demographics. So we've got the kind of the most top-heavy demographics we've had in the country's history. Two, we've got this really expensive healthcare system, which is then also entangled with those demographics. So Social Security and Medicare are just massive outgoing expenses compared to those paying into them, and that's pretty structural and very hard to cut or raise taxes on. And then also we have the issue of financialization. So unlike many other economies where tax receipts are not very correlated, like with their stock market, in the US, the tax receipts tend to be pretty correlated with the stock market because we got this really giant stock market. All global capital wants to be in it. The way we've done our tax structure, I mean, we have more wealth concentration than most other developed countries. And executives, a lot of times, their compensation is in equities in various forms, equities and options, basically. Capital gains taxes are a big deal. And so what makes that hard is that any attempt at austerity, even if you somehow manage to convince voters and politicians to try to trim expenses or raise taxes, you generally start to get a slower economy and a weaker stock market. And then with a lag of like 6 months, 12 months, 18 months, that starts hurting the government's tax receipt side. And that deficit, while it started to maybe contract a little bit, it starts blowing out again. And then in addition, the last point is that basically we had 40 years of declining interest rates that offset our debt expense, and they're no longer falling. So even if they're just chopping along in a new sideways range now, we no longer have that offset. So interest expense has now exceeded defense spending for the first time in like the country's history, and that's not a great position for an empire to be in. And so it's just kind of the maturation of the past several decades of policy decisions. And basically, the entropy of the ledger has built up on the public side. And we're in the process, kind of like the 1940s, where you do some combination of run it hot, inflate it away, um, and go from there, with the difference being that we have way worse demographics now. And so that tends to kind of it's this more slow motion process of just money still pouring out to those on the receiving side of the deficits. And there's really no political will or mechanism to address that meaningfully in the next 5, 10 plus years.
So then, if nothing stops this train of rising US debt, what are then the consequences for the global financial system and sort of the rest of its citizens?
So basically, there's a it's strong incentive to try to get out of the system, at least gradually. If countries take no action, their reserves gradually get debased. And in addition, right now, the U.S. is running loose fiscal policy, meaning large fiscal deficits, and trying to compensate with that by tight monetary policy. So that kind of like that combination sort of squeezes countries that are have a lot of dollar debt,
Yeah.
because now all these interest rates are higher, and the dollar's kind of hardened to some degree. And yet more and more dollars are spewing out there, which is also not great for those saving in the reserve currency either. It's kind of like if you're in a car and you're putting down the gas and the brake at the same time. That's kind of what the US economy is doing. Countries that don't take any action can get caught up in that. And so basically, if they don't take action, they find themselves both debased and squeezed. And so they really have to kind of around the margins do other things, build other settlement networks. China's really kind of been, focusing on shifting over toward, in some ways, gold settlement in a way where they do all this trade with other countries and they have ways to convert their currency to gold, even though they otherwise have pretty closed capital accounts, and, facilitate trade that way. And countries that have been early to get gold as part of their reserves have done well because gold, more than doubled in price over the past several years, completely outperformed bonds. While those that took no action just got their reserves melted basically. And so that's there's a lot of consequences for being a laggard, either on an individual level or on a sovereign level.
So we have impacts to citizens and individuals as well as countries, but the US also has their monetary policy has impacts on, or sorry, and fiscal policy has impacts on corporations as well, right? So why are corporations now buying Bitcoin?
So a couple reasons. One is I mentioned before that in this era, one of the ways to get rich is to short currency and buy assets. And corporations have been one of the best at doing that. Some of the examples I point out, like so Coca-Cola has been like profitable like longer than we've been alive. Why do they have like 40 billion in debt,
Yeah.
right? And it's because they choose to, because it's kind of their version of doing a speculative attack on the dollar. Ironically, they would never phrase it like that, but they would say, "Hey, if we can issue bonds for 20 years at 2%, why would we not do that? We can buy almost anything else with that money, and it'd be better than just not doing that. Uh, most individuals can't do that, but these large companies can. And so one of the best products Procter and Gamble ever sold for itself was its bonds. It's if MGs are going to sit there and hold 3% Procter and Gamble bonds for 30 years, they're like, okay, great, good job, guys, and then they go and they buy their own stock with it, which is higher returning than 3%. And so basically, corporations have been doing this kind of purposeful financial arbitrage for a long time, where they decapitalize themselves and they pay out dividends, they buy back their own shares, they make acquisitions, using their shares as a currency, and basically shorting fiat currency along the way. And yeah, one of the more recent ones, I mean, obviously pioneered by strategy, is to do with Bitcoin. To say, well, instead of using that money for dividends and share repurchases or acquisitions, we will stash it in Bitcoin, which has a hard cap supply and is being adopted as global portable capital and money, and has a high appreciation rate historically, and by all analysis is likely to continue, at least for according to those who run these companies and invest in these companies. They're bullish on the asset. And so wherever they can, they also issue various types of dollar liabilities, or in some cases other currency liabilities, and are long Bitcoin. And it's basically it's a financial arbitrage to say, if you're going to keep debasing your currency, then we're going to basically short it, and we're gonna buy scarcer assets with it. And individuals have historically been able to do that to some extent with, say, Like anyone who has a mortgage and also has financial assets is basically choosing to be levered. Like you could, sell your assets and pay off your mortgage, but you're choosing not to because if you've locked in a mortgage some years ago and you're paying a 3% mortgage, especially in America where it's like these long fixed rate mortgages, and people can hold stocks, they can hold gold, they can hold Bitcoin, they can hold, any asset they expect to outperform a 3% hurdle rate, they do. And corporations are kind of doing the same things. And that's kind of the one of the challenges of the system is that those that are young or impoverished generally don't have the access to do things like that.
Yeah.
Whereas once you have wealth, either because you're a wealthy individual or a corporation, you've got more access to cheap leverage in capital markets. And so you can put all these kind of currency shorts into play and arbitrage from the system. And that's part of why there's this big wealth concentration engine in play. And it's been going on for decades.
It sounds like it can be a good thing, right? Especially if you're sitting on cash, but you don't want that to erode away, so you're buying Bitcoin. But what about the treasury companies that are either forming or completely switching to a treasury company? If you look at Bitcoin, its network effect is massive compared to all the other cryptocurrencies, right? Same thing with strategy. Like they are almost 10x, more than 10x of any other in terms of how much Bitcoin they own. Do you think strategy is kind of like a one shot, but it does make sense for other corporations to accumulate Bitcoin more so as a protectionist measure?
So I think there's space for leaders in every major currency market. So kind of like how MetaPlanet is kind of the MicroStrategy of Japan. I think that role exists for multiple currencies. Basically, there's this opportunity to say, you want to be ideally you want to be the biggest, most liquid in your currency market. Generally speaking, if you're not, I mean, you can also employ other strategies that are maybe a little differentiated to attract attention, but there's kind of limited space for that. But I think there's a long tail of opportunity, like you said, for just protection. To say, hey, we're not the pure play treasury company. But we're running this company XYZ and we're bullish on Bitcoin. So instead of just 100% decapitalizing ourselves or holding cash, we will put some of our treasury assets into Bitcoin, and have this kind of long-term appreciating rainy day fund. That can be just part of a strategy. I think it'll be increasingly common.
Yeah. Do you think paper Bitcoin summer is good for Bitcoin, as in all these paper Bitcoin companies forming? Because you noted in your July article, right, that this corporate treasury adoption strengthens Bitcoin's network effects, maybe reduces some of the volatility in the market on price, but you also raised some concerns about concentration risks, right? So then we're getting more and more MicroStrategy clones. Do you think there should be any kind of safeguards adopted? Good, bad? What do you think?
Well, any sort of safeguards are adopted on the individual company level, or certain, nation state regulations. Basically, when people ask if it's good or bad, I just say it's inevitable. And because there's this narrative that's like, oh, corporations have it now, so it's not safe for public money anymore. And it's like, well, there was no world where it gets really big, but only individuals use it. That's like a fairy tale. That's a world that doesn't exist.
Your enemy's going to use it.
And so when it was small, individuals used it because large pools of capital really couldn't. It's not big enough for them. There's not enough liquidity to get in and out without slippage, and risk and all that. So now that it's big and liquid, larger pools of capital want to be in too. And the main trait that Bitcoin has is that doesn't really make it any worse for the small users. The only mechanism that can potentially make it worse for the small users is high fees, as more people want to use it. But that's what other layered solutions are for. So they can still have a lot of the properties of Bitcoin, even if they're not necessarily using the base layer. But even in the current time, on-chain fees are still low. So it's
Yeah.
kind of the best of all worlds. The large pools of capital are adopting it, and yet they're not really crowding out the blockchain. And so it's just as usable as ever by the small user. And yet large pools of capital are pushing the price up and potentially suppressing the volatility. Because when Bitcoin is kind of young and in the Wild West, one whale can come along and move the price. And part of what prevents people from using it as near-term savings or denominating things in is the volatility. And as Bitcoin goes from zero to the equivalent of trillions of dollars, it has to have upward volatility. With upward volatility comes periods of leverage and euphoria, and therefore periods of washout and downside volatility, which temporarily harms it as money, because you can't denominate your rent in Bitcoin. Generally speaking, you can sometimes pay it, but you can't always denominate it. because it's been this too volatile appreciating thing. But as it gets closer to whatever size it's going to become, then instead of just using it as like longer term savings and for kind of you know like the most censorship resistant payment rails for like deplatformed or sanctioned entities, it can become more usable as intermediate term or even near term savings as the volatility eventually decreases. Still not there yet. And then by when that happens, also more entities can denominate actual prices in it. And so part of the maturation process of being global money is going through just large pools of capital want to own it too. And it's a proof of work network, not a proof of stake network,
Yeah.
which gives it resilience. And there's been really big pockets of centralization in the past. I mean, Mt. Gox had a huge percentage of the coins back in the day, and so right now, you kind of watch for periods of concentration, but it's not really that different than the network has historically operated at. And so it's I consider it mostly a good thing. And I think, if there's a downside, it's just, the narrative can get kind of crowded with everyone talking about the treasury companies and not enough people talking about, because people can get distracted by shiny objects. So, I mean,
Yeah.
there's been recent court cases that are not good for Bitcoin privacy, for example, that are kind of reduce the incentive for people or increase the risk for people that want to build privacy type solutions, and set not great precedents in those areas legally. And so as the price goes up, that's great, but I still think it's important for people to build and use some of the more cypherpunk parts of the market. And luckily they don't really compete. It's just that sometimes you can forget one or otherwise kind of have it not be emphasized, but they're still there and they're still for the most part growing.
Yeah, the censorship resistant element, it just obviously isn't as sexy on the news right now. I think the Roman storm case was, we pay attention to it, but maybe the rest of the world doesn't. And it's not just in our currency, right? Like there's slow erosion of privacy everywhere. Look at some of the recent laws that are being passed in Europe. It's not just financial surveillance, right? It's surveillance on speech. And so, at the individual level, we need that censorship resistance. And then at the country level, too, right? If we scale it up, they need to be able to transact to participate in the global economy. When Ukraine and Russia started when the whole situation blew up, what ended up happening is, assets were seized from Russia. Russia, Belarus were cut off from the global financial system. So how do you settle? How do you transact? And sometimes it's just the individuals that I have friends from in Belarus they have businesses that no longer could participate, sell their wares. And so both from a country level and a citizenship level, it's important to have those alternatives. And then we have this whole shift towards central bank digital currencies. You're lucky because in the US, the administration has moved away from central bank digital currencies. I'm in Canada and Carney's like full on love central bank digital currencies. And that's not just from a surveillance perspective scary. And I mean, Canada has shown, its hand around when the truckers' protests happened, right? They shut down the bank accounts of all those that participated. But now you have money that has time limits. You need to spend this benefits that we gave you. In Cyprus, right? The government performed haircuts against its citizens' assets. So it's kind of a scary world that we're coming into. And most people I feel that aren't in our area are just so oblivious. And I don't know how they can start. Like it's that frog boiling in a pot, slow analogy, where everything kind of like speech becomes shut down, money becomes shut down, and I'm not really sure. You almost need that disruptive event.
Yeah, I mean, it's definitely concerning. And historically, when we go through these longer term debt cycles, these periods of fiscal dominance, that tends to come with various financial repression and kind of centralization of power. And, with technologies like Bitcoin and Nostr, there's mechanisms around those, but then the question becomes, do people turn to them? And, you know, I generally I'm not super optimistic on numbers, people like turning to them before they have a problem. A lot of people turn to them after they have a problem. And so instead, my emphasis tends to be on educating about them to try to make sure they continue to exist at scale and are not kind of suppressed while they're still small by the powers to be. And so, from the policymaker perspective, they kind of want like the sharecropper model where like people don't really own things, they just rent things.
Yeah.
They participate on the ledger that policymakers control, and they can be just shut off and surveilled at will with no recourse. Technologies, whether it's the old school version, which is gold in your house, and now it's Bitcoin, and now it's Nostr and things like that. Now there's not much if certain speech is criminalized, then even on Nostr you can have an issue, but it still gets out there, and then but you still face potential consequences for it. Either sometimes obviously social consequences, or in some cases government consequences, and portable capital can at least give some people options to move. The challenge there, of course, is those with more resources tend to have better opportunities to move, and then you get kind of brain drain out of a place that's going through trouble. So the people that are left, it's even harder to then get out of that situation. So I think the best people can do is kind of educate, and I think another thing is just kind of trying to be examples. So whether on the individual level or the sovereign level, they can say, okay, you're doing things like that, because a lot of people, if like kind of a frightening number of people are kind of against privacy if they feel like it makes them safer, and as long as they feel like they're in the majority that won't get suppressed too hard. And so it's kind of like that's the challenge you're up against. Everybody in their fiction, they like to read about the rebels, but then when it really comes down to it, they're just like, no, I want to be safe, and I trust people trying to keep me safe. Kind of is how it kind of tends to go in practice.
Yeah.
And narratives and emotions can shift around very quickly. And some of the best people can do is just say, well, okay, if that's working for you, keep doing it. And then if you're, focusing on things that are potentially longer term better, maybe eventually they'll take notice and say, tell me about that Bitcoin thing again, or tell me about, what you're doing over there. And then it's important just to make sure that pockets exist where people can live like that, because again, there's laws that can suppress things. And then nation states can do the same. It's like, well, if how's all that surveillance and debasement working for you over there? It seems like your economy's not great. Well, over here, it's things are going better. Maybe you should look at some of these models that this country's doing and not that other country. And over the long arc of time, it can sort itself out, but it can be a very painful process. It can take a lifetime, meaning that people spend a lifetime on the wrong side of the wall as it goes. It used to be literally, and now maybe figuratively, digital wall. And that's the challenge. I think best we can do is all do our small parts.
I really like that. For example, the arrests in the UK about folks just posting things online, right? And that's just such a slippery slope, because somebody says, "Oh, I'm offended by this," and then you're suddenly arrested, you get 3 years in jail. That's not something that I think of as sort of, typically what the developing world is like. And truly, I see that as something that could happen in Canada. And so I'm grateful that there are pockets of the world that one could move to that free speech is still preserved, because they almost sound like fiction, right? We have resistance money and we have resistance social networks, whether that's Nostr, and now there's FitChat that's being developed where it's messaging through Bluetooth where you don't even need the internet. So I think building those tools, supporting the building of those tools, making them easy to use and access is such a huge part of what we can do.
I agree. I think, yeah, there's really two main approaches here. One is make sure the technology itself works. And then number two is protecting the legal use of that technology and just kind of legal footholds wherever possible. And like in the US, for example, it became such that politicians, if they were anti-crypto in air quotes, big money would either avoid them or in some cases purposely find candidates to go after them. And the SEC was blocking Bitcoin ETFs until they were sued on it. And so basically the incentives chipped away at that over time. And that can happen in multiple places where it's like, the government's not a monolith in most places, at least, the places that we're talking about. There's a lot of moving parts in government, a lot of opinions in government. And basically, people can constantly fight that legal draconianism in parallel to those that are working on the technology to make sure that the fallbacks are there where possible. So it needs to work in practice, and then ideally you need to protect it so that it's reasonably convenient and safe to use, at least where possible.
So we have this rise of AI, and there's obviously good things and bad things. It can enable and facilitate like massive and increased levels of surveillance, right? I was just reading today that there's a paper out on AI enabled coups, how like a small group could use AI to seize power in a country. So AI, I think, is this technology where both it can destabilize economies sort of by shifting, uh, the nature of work and how jobs are created, but then at the same time, sort of at the government level, taking power and maintaining power can be just a little bit harder. So thinking about AI, is AI compute sort of the new oil? Do you think it's becoming this new strategic resource for nations, rivaling oil and geopolitical importance because of, the possibilities?
I think to some extent, I mean, there was this early concern that basically one AI would just go to dominate. Like whoever kind of reaches it kind of a critical stage early kind of wins. It's been pretty clear that the gaps close pretty fast so far. And if anything, kind of the progress is slowing down in some areas as like existing AI data feeds back into new AI training data and you have data integrity problems. With AI in general, it empowers both big centralized hubs, because you can imagine like AI supported surveillance, and then also, so that's like the Big Brother scenario kind of that in the current age. But then AI can extend the power of an individual. You can just do more. Like a small business with like 3 employees, but then like a bunch of AI agents and
Yeah.
processes can do a lot more than they used to be able to do it. It compresses the overhead of what's possible, which is good for decentralization. And people are working on making available open source AI, a more private AI. Right now, there's obviously concentration of the top tier chips for that. That's probably the biggest nation state level one. Whereas an individual level, it's more about can it be reasonably open sourced and private without sacrificing quality too much. And so I think there's a bunch of arm races going on at once. It certainly adds to the complexity of all this, but like any other tool, it can be used for both good or ill.
Yeah. So how do you think the race for the AI infrastructure is reshaping global power dynamics, right? Do you think it's going to exacerbate energy shortages and then as a result geopolitical tensions, or is it sort of just what you talked about?
I think it can to some extent. I think there was, especially like the 2010s and into the early 2020s, there was this kind of peak period of like luxury beliefs around energy, where because energy was pretty secure in the developed world, and then people would kind of just develop views of energy that are kind of detached from reality, and there's increasingly economic consequences for that. Um, like Europe is around the margins gradually deindustrialized to some extent because they lost access to really cheap, reliable energy in a way. And AI then just adds fuel to that fire. It's another thing that if you have low cost energy, you can put it toward as an edge. And there's multiple resources out there. I mean, if the country's like beautiful, their edge is tourism. It's like we have this beautiful thing and people want to come here. And same thing with like states like California. And then cheap energy is one of the more powerful resources that exists out there. And so if a place has a cheap energy, it gives them an edge in manufacturing. It gives them an edge in AI and just overall compute, which increasingly in the digital age is very important. And so I'd say this punishes places that either just lack ways to get cheap energy or have made political choices that are just kind of detached from economic reality to have cheap energy. And it's like the phrase like the beatings continue until morale improves. It's like to whatever portion of that is self-imposed, things will keep not being there and being elsewhere until things get messy enough and there's some sort of political change that says, hey, maybe we should have some of that here. Maybe we should change some of our policies. So it just kind of pushes back on certain beliefs that were formed at a time where they didn't really have immediate consequences, and now they do.
You looked at countries that embraced new tech versus not, and I'm thinking about Bitcoin mining at this point. Those countries that banned Bitcoin mining or did not incent it in any way did not see sort of this growth of data centers. They were Bitcoin mining data centers, but still, so they accelerated the development of grids in terms of potentially supplying new power or subsidizing power, whether that's renewables, because miners co-located to it, or shoring up the existing electrical infrastructure, so distribution, transmission lines. You look at El Salvador as they participated in mining, yes, at a smaller scale, but some of that investment went into shoring up their electrical grid. I think it's really interesting seeing those countries that did develop their power because of mining. A lot of them are shifting away into AI data centers because if you build it, they will come. Those countries that are a little bit more open to tech are securing their economic sovereignty because in a way that was an investment in it.
Yeah, pretty much. It's a case where just more free, open, forward-looking places have been rewarded for that in general, which is a good thing. And then the question is, will jurisdictions learn from that or no? And it's partially their politicians, it's partially the public. And the best people can do is one, show by example to say, hey, this place did this and they're flourishing, and this other place did not, and they're having a rough go, as well as at the individual level, just putting out educational content, putting out practical examples, and just trying to, make sure that truth wins where possible.
You talked about, the rise of AI and empowering the individual and also governments, but then at the same time, we have the rise of robots. Vehicles being driven or robots that are going to come to our homes. Never mind the surveillance aspect of having a robot in your home. As we deploy these more autonomous AIs and robots, do you think they're going to start transacting economically in their own right? And kind of like, what money do you think these AI agents and robots are going to settle value amongst themselves?
So around the margins, there's already been AI agents using Bitcoin or other monies to transact. Generally speaking, one of the most important attributes of a money for them is permissionlessness. Because at least with the current kind of banking setup, it's hard for an AI to get a banking account.
Yeah.
And so things that they can just use, like if they have the technical ability to do so, they can just do it without asking permission. And so that's Bitcoin, unless it's sanctioned in some areas, that's stable coins, and they will use what makes sense for their given environment or whatever the merchant that they're trying to buy something from accepts. So there are network effects at play. So I think basically Bitcoin and stable coins are kind of the go-to ones for them for the foreseeable future as they, transact and operate economically. And I think they increasingly will. I also think there's a big difference between like virtual AI and actual robots, like portable, like because everything is way harder in the real world and portable. Data centers have economies of scale, obviously huge power connections. Whenever you take something and then put it in a portable battery powered form and then in the field where it's like the physicality of it's just like 100 times harder. So I generally tend to be more, I don't want to use the bearish word, but like I've always been, there's always big promises for like when robot cars are just gonna be everywhere or like robot assistants, and I'm always kind of like, yeah, like whatever you're thinking, it's like longer than that. And whereas I've always been kind of super bullish on the data center portions of it, the software portions, all that, and I think that gap's gonna keep growing for a while. Which not to say we won't have robots, but it's just to do something that a human can do economically in the field is just a much bigger hurdle than some sort of white collar task that was kind of repetitive that we can just have some entity in a data center do it. That's a much easier problem than the portable aspect.
Have you seen the chart that I saw yesterday where US general office construction is on pace to be overtaken by new data centers in the coming months?
Yeah,
Right.
I expect it. We don't work from home. We
Yeah.
work from home now, and increasingly more of your employees are literally portions of a data center
Yeah.
instead of like, literally people in an office. So I think that makes sense. I think it'll hit a certain kind of peak level. We don't know where that level is yet, but yeah, it makes sense that there's as technology impacts, there's a shift. And going back to your energy portion, like basically people can be kind of arbitrary with this because there's kind of group thinks or moral panics around certain things in any given period of time. And right now, like I mean, I always point out that Bitcoin mining was such a tiny share of global energy usage. It still is. Even now, like AI is still like a tiny share of global energy usage
Yeah.
compared to like, all the other stuff we do with it, and you don't see like moral panics as frequently around those. Now, some people are actually consistent and have this kind of like quote degrowth narrative, which I would disagree with, but at least they're consistent about it in a way. But it's like, the world, people obviously they want to improve their quality of life. That can include physically around them, having materials and all the luxuries of life that allow them to be productive and safe and healthy. And then there's virtual ones, basically taking tasks that you used to, have to do yourself or hire someone to do, and to automate them in a similar way that, we're able to have this conversation because long time ago people automated most farming and everybody was able to go build other stuff and they built all the infrastructure that we're able to have this conversation with right now. And it instead of like 60% of people having to work on farms to feed everybody, we can have like 1 or 2% of people feed the whole world because we added automation to the mix. That increasingly happened to other industries as well. That happened to some extent to manufacturing. And that can happen to certain white collar types of work where you don't need an army of accountants. You need a handful of accountants and a bunch of their robots or a bunch of their agents to run something, and those people can then use their intellectual and creative pursuits elsewhere.
So then Bitcoin's digital real estate, right? AI compute is the new oil, and then data centers are the new offices, and androids do dream of electric currency.
I think so. But I mean, it's funny in Blade Runner, so where that phrase comes from, if I remember correctly, there's like people have like say like it would be a luxury to have a real pet
Yeah.
instead of like a fake pet. And I think as things do get digitized, there's certain things in the real world that will be scarce and attractive. Nothing really replaces being in nature with the sun on your skin and good healthy food and all that. And it's going to be almost like, I think, a sign of status to be somewhat disconnected, at least choosing to be disconnected for periods of time and have access to what is still scarce, which is kind of the real world.
Tech people are, once they've made their money, are like, I want to garden. I am buying acreage and I'm going to farm on my own.
I think we have instincts that are geared toward of physical existence, and it's like ironic. It's like we used to farm because we had to, and then we don't have to anymore, and then people were like, but I want to, and
Touch dirt.
so it's people want to do it.
And we've outsourced all creativity to AI. All the podcasters are AI.
I actually again, I think kind of like how in Blade Runner they want real pets. I think the luxury is going to be people get so detached. One is they're working from home.
Yeah.
And then everything's AI. People want other people.
Yeah, connection.
So I think that actually then there's a renaissance to some extent in real world meeting places. If it's not work, then it's something else. It's the pub, it's field, it's things like that. And then also kind of like how people often would have the TV on just to listen to a human. People do the same with podcasts, and I don't think AI is going to cut it in many cases. If you're just trying to like absorb information, then sure, AI can do it. But people want to listen to Mags. They don't want to listen to AI, number 1337. They want to listen to Mags.
Not
Yeah.
Lyn Alden AI.
Yeah.
Canaan helped launch ASIC mining with Avalon, the first batch of ASIC Bitcoin miners back in 2013. Today, Canaan builds the chips, runs the rigs, and hodls the rewards with 1,511 Bitcoin in its treasury as of July 31st, 2025. In addition to industrial machines, they've also rolled out consumer gear to make mining accessible to everyone. Canaan trades on the NASDAQ under the ticker CAN. Learn more at canaan.io.
I'm going to shift to fun section of this portion because people want authenticity and interesting things. So you've talked about how you used to do martial arts, right? What did you enjoy about it? Like, is it, for example, like the fact that you are training with this team that becomes sort of like your new family? Or do you think it's a way that it can help you get through bear market? Like, what is it that attracted you to martial arts? And like, do you want to go back?
So I did it for 12 years. And growing up, I had closer friends from martial arts than from school. Even though I had friends at both, but actually it was between the two, martial arts were the bigger one. I'd say the benefit, like, the reason I got attracted to, I mean, one, I was a little kid, Power Rangers maybe, I don't know. And it was also as process of elimination because my parents would say they put me in soccer, they put me in martial arts, and the soccer didn't really stick, and the martial arts did. So it's kind of like process of elimination. It's like I was bad at everything but martial arts. I started out bad, but it's like I did it long enough somehow and got halfway decent at it, and then it became actually I like doing it. And so, kind of the description I've used before is that some sports are entertaining, and that's about it. Other sports are entertaining and make you healthier and more athletic. So it's two things. And martial arts are entertaining, make you healthier, and give you a skill like self-defense.
Yeah.
And with that can come confidence and other things. So it's really one of the more holistic sports that someone can do, along with maybe gymnastics and a couple others that are kind of these whole body and mind things. It's very intellectually stimulating. Like anyone just studies jujitsu and all the different things you can do and learn and counter with. So it's both physically and intellectually stimulating. And then at least when I did it, it was back in even though it was mixed martial arts, it was in the kind of the karate tradition.
Mr. Miyagi time?
Yeah, a little bit. I mean, and it was kind of karate mixed with kickboxing and submission grappling, and it increasingly morphed into what we call MMA now. But basically, there were belts and hierarchy. So there was always like this target. Like it's like I wanted to become a black belt, and then it's like I wanted to become a secondary black belt, and it's like in certain other sports, you have certain milestones you want to reach. I want to reach varsity, for example, and so it had that
progression
going for it as well. So I definitely recommend if anyone has kids, see if they would like to do martial arts because can't recommend it enough. Basically, martial arts and gymnastics are the two that I think are awesome.
I totally agree. I think kids too, a lot of times when they're really young, they're still learning sort of like the boundaries of the body and how to move it. So it builds that confidence. But then also there's like that mental discipline, right? Where I find, kids are kind of coddled these days in schools, right? They do their own thing. They're not like as listening to authority, and teachers are no longer allowed to sort of exert this authority. It's very different in a dojo, right? You have to listen to sensei, suck it up. You might even get hurt. Sensei may punch you gently, but you're building that mental discipline, mental resilience. Sometimes you do get hurt, but you have to kind of through it. It's incredible to do that. And then because you are sometimes sparring, it's a very different type of contact and trust that you build with those folks that you train with. So I totally agree with you on that. You build close bonds. It's like your karate family becomes another family.
Yeah, I went through tremendous. I mean, like even we back then we used to do like breaking wood, for example, and for me that was like scary, and that was like it's just this thing, and it's painful if you hit the wood and it doesn't break.
They didn't floor it, did they?
No. And so like that was like, it's confidence building and it's kind of discipline and hardness building. I went to a tournament and I fought this. She probably should not have been in that division, but she was kind of this like pro that joined kind of the level that was right below pro.
Okay.
Like bunch of like everyone was a black belt, but not really like pros.
Yeah.
And this pro was in it and I had to fight her. I had like a 15-pound weight gap as a smaller one. It's like I lost that, of course. And it was funny because I asked my instructor, I was like, what do I do? Like, when I found out who I'm against, and they're like, well, you're going to lose. But how do you lose slower? It's okay. You're faster and you have a little bit more reach. So whatever you do, do not let her grapple you. If she grapples you, it's over. And so for like 2 minutes, I was actually like out fighting her. But then she eventually took me down, and of course it was over. And I was like sad about that. But what I learned was, okay, like what she kind of figured out was that I am faster but not very strong
Okay.
compared to her. And so she's got like 10 years on me. She's got like 15 pounds on me, and she just decided she can take a couple hits
Yeah.
and take me down. So that's what she did. She just opened herself up. I hit her as hard as I could.
Get you.
It didn't feel great, but she tanked it and then got me down.
Okay.
And so what I learned was I need to work on power. So 2 days later, I signed up at a gym and I started weightlifting
Nice.
to get more power so that if someone opens themselves up, then I actually have enough stopping power. So it's mostly about like kind of running into these brick walls and then trying to figure out how to improve. What you said is like in a very coddled world is, yeah.
You talked about breaking wood. Did you ever try breaking a piece of paper with a fist?
I
'Cause
th
I think it's
I did
harder.
not. No.
It's harder than breaking a piece of wood.
I think so, yeah, because it bends. Yeah, we used to hit of course we hit like X-ray paper to
Oh,
like
okay.
practice our kicks and stuff like that.
Yeah.
But you never actually break those. Yeah, most of us it was wood. A couple people would try bricks, or ice.
Break, paper gold certificates. Get good enough to power through. So you talked about sort of your karate days. Now, Lyn, did you also have Dungeons and Dragons group back then? Tell me more, because we've announced it, but something very cool is rumbling. It is the first Dungeons and Dragons and Bitcoin Quest crossover with a motley crew. Do you want to give a little bit of a teaser?
Sure. Yeah, I mean I had a neighbor, cross the street neighbor in middle school that taught me how to play. And at first I didn't get it. Like he kept trying and I got it. And it was like, it's this fun strategy game. And off and on I would do it since then. It's funny because it used to be Dungeon Dragon was known as like the thing that nerds do. It was kind of it was like video games before video games were around.
Yeah.
So it was pencil and paper video game basically, or role playing game. Then video games came around, started competing with it. It has pros and cons versus video games. What's interesting is that YouTube kind of gave it a second life because instead of now you have like the Venn diagram of the nerds and the theater kids because people like to perform
Yeah.
and role play. And so now it's something that can be like shared in a way that was obviously couldn't really do decades ago. And so it's a really fun game that brings in people with there's different aspects of the game that they find the most interesting. And so yeah, we're putting together that whole Bitcoin quest.
I'm super excited. So Tatum Turn Up is going to be the dungeon master and sort of the backstory is that Bitcoin supply cap, has been reached long ago, but that fight for sovereignty is raging on. It's taking place at like the Bitcoin conference in Las Vegas, which has just overrun all of Vegas. So the immortalized digital consciousness of Michael Saylor summons a team of legendary Bitcoiners, and those being Carla and Walker, myself, and Stephen. Saylor's fortune is locked in a multi-sig wallet, and to evade a quantum attack, the keys that are hidden, we have to find and secure them. So before the future of the chain is lost. So I think I'm super excited to have this crossover event. My first time playing Dungeons and Dragons. So, it's going to be a bit of a learning curve. I think we're going to dress up, some of us, which will be kind of interesting. I fully want to get into this. But I think it's interesting though, because, you're talking about this authenticity of this like real world connection. And I find we don't get to be creative these days as much anymore. Like, what better creation and imagination is to like get with a group of people and do this role play and create your own story, right?
I think it's a lot of fun. I mean, that's why, I work with like spreadsheets and SEC filings all day. So, on the side, it's like I either want to read science fiction and fantasy or write it or play in it. And it's one of the avenues to do it.
Yeah, you have a book coming up, a sci-fi fantasy. It's in my inbox. I'm so excited to start reading it soon. Did you have fun writing it?
Yeah, it's a lot of fun.
Is it a fun
Yeah.
book or is it a sad book? Is it dystopian? We're all gonna die.
It's closer to sad, I'd say. I don't want to spoil it.
Okay.
It's not. It's a dark. Yeah. It's funny because joke that because my husband was traveling at the time, working on his property in Egypt, and I had to be in the U.S. for that period, so we were like kind of separated for like a couple months there. And so one of my things was, well, in the evenings I'll work on my book. And yet it's like it kind of kept my mental health in check, and yet it's quite a dark book. So if someone reads it and is like, that's what kept your mental health in check. It didn't depress you.
Maybe it's Lyn's way of warning the world around financial surveillance and all the things that are happening. They're like, dang,
It's getting it out of my head onto the page. Yeah. Yeah.
they're not going to watch our little TikTok clips, but instead maybe we will, brainwash them of how terrible it is through sci-fi novels.
Yeah, it's like there's elements where there's like obviously surveillance has been an issue. It's kind of a post-truth world in the sense that it's just very easy to spread lies or fake things with AI. And so if something is true, how do you broadcast that?
Yeah.
Just take the current technology and fast forward it so that anyone can just in 5 seconds make a video that's nearly indistinguishable from real life. We're not quite there yet, but it already works on some people.
Yeah.
And so obviously people will become more savvy to it, but also technology will make it even harder. And then if it becomes impossible for people to really know what's going on, they just kind of stop caring is the hard part. So, yeah.
Closing it off, so let's circle back to your book, your first book. I know you did huge quantities of research about it. What was your favorite stories as maybe you were researching the evolution of money? Was there something that you're like, that's really interesting? Like you mentioned something about coinage and the kind of challenges of that. What made you be like, that's really interesting?
I'd say a couple things. One was the money in Diablo 2.
Okay.
That initially came from a source by Gigi, but then I dug into it. So that was it. The reason I found that interesting is because, so in Diablo 2, very successful video game, and originally, so there's gold in the game, and then there's all these items. And of course, the developers wanted you to use gold as your money and other items for other things. But in that game, gold is terrible money. It's inflationary, and if you die, you lose some of it, unlike your items. So people started they started monetizing certain items as actual money, and they quickly moved toward the things that had the ideal properties of money. So they were valuable, but in a small package, and people kind of used them as basically digital gold. Even though there was literal gold in the game, it was more like fiat, and it was just there wasn't like a council of people that decided this. It was just a bottom up decision. Quickly found that like these 2 or 3 items are the best monies, so we're going to use those now, and they kind of just recreated digital gold and silver with them.
Kind of like in prisons, right? Sardines and cigarettes.
Yep,
Become
exactly.
money, like these little ecosystems people kind of optimize.
And that was a great multi-million player example of just very fast bottom up changes. I think the other one is Money and the Mechanism of Exchange, that book, because in that chapter I was focusing on transaction speeds versus settlement speeds, and I found that it was lacking. And so my final resource, I came across this book from 1875 that was literally the resource I needed. because literally what was cool about that was transatlantic cable was laid in 1866, I believe.
Okay.
There was like a failed one, and then quickly there was a more successful one. So 1860s, let's call it. This is written in 1875, so it's like 9 years later, and this guy is kind of observing the increasing centralization of money
Hmm.
and he's basically saying that every friction in finance is solved by another layer of centralization. And he had these like charts of just showing trees of like centralization. And he's like, on one hand, this is great. It's super efficient. All these IOUs move around, and gold never has to move. It's great. And he's like, but it's now levered 20 to 1, and people seem to forget that it's all technically backed by gold, and this could be pretty catastrophic. So he was like, it was a great source of like people in real time analyzing the early stage of fiat currency, basically the telecom era, and kind of correctly saying how efficient and yet scary it is. So that was probably my favorite individual resource. And it was the last one. It was kind of it fixed the little gap I kept.
Really love the story of rye stones in Polynesia. So
Yes.
yeah, so communities in Polynesia were using these big stones as their money. But the cool part was sometimes they would transfer the rye stone on a boat and then the boat would sink. But verbally, they would still communicate that this ledger exists. It was transferred from which one tribe or individual to another. And it's kind of like the ultimate trust me, bro.
Yeah. Yeah, it was a great example. It was a great example of one, proof of work. So why those stones in particular were valuable and not others. And two, it was like a commodity ledger money because like they often wouldn't even physically move, and people would just verbally say this stone sitting here, whether it's underwater or whether it's laying against this tree, is Mags now. I hereby transfer it, and people are like, okay, that's on our mental ledger. That's Mags now.
Yeah.
Bitcoin Standard really popularized that, and I include it as a reference as well, just because it is really fascinating and unique case in monetary history.
Looking 20 years ahead, do you think we'll have made progress in fixing our broken money?
I would hope so. I mean, I think we can already see there's progress in that there's more optionality in more parts of the world than there used to be. Generally speaking, earlier adopters are the ones that have benefited rather than society at large. And I think these network effects take time. So if you ask me, if you give me like a 5 year timeline, I would say probably not a ton.
20.
Yeah, so like 5 years, it's like, well, I think Bitcoin's higher, but has it really fundamentally changed the world? No. 10 years, probably still not, but maybe increasingly so. If you start looking at 20 years, I would hope that like there's been pretty big transformation. I mean, at that point, unless something's managed to take it down, Bitcoin's in 20 years is huge, hopefully, and therefore more stable, price wise, and available to a ton of people. And that it's just people grew up with it existing. At that point, it would be like 36 years old. And so anyone under the age of 46 at that time would have been like either born during it or was 10 when it came to existence. Like there any sort of like adult life really. Bitcoin just been around. It's been a thing. And it's something that people can use and build on, and the AIs are using it. So, we'll see.
Yeah. Well, awesome, Lynn. Thank you so much for doing this interview. Where can people find you?
People can check me out on lynalden.com. They can check out Broken Money on Amazon or wherever else they buy books. And thank you for having me, and good luck with your podcast.
Thank you. I had a lot of fun.
Thank you for listening to this episode of Magsplaining. Make sure you subscribe to the show so you don't miss any new episodes. And if you turn on the notifications or if you leave a positive review, it can really help my show reach new listeners. This show is for entertainment and educational purposes only. Nothing should constitute as official investment advice, and you should always DYOR. Do your own research. Catch you next time.